Hi everyone, it's Irk with Get Irked, and today we're going to talk about making trading plans. What you can see on your screen right now is the TradingView website, the platform that allows you to do charting and technical analysis. If you want more background into how to do basics of technical analysis, I made a video that you can check out on my channel, and there's a link below in the description where if you use it and you sign up for a paid service, I get a little bonus back from TradingView. However, the free version is really spectacular, so I highly recommend you check it out even if you have no intention of paying for it. So what we're looking at here is the monthly chart of VOO, which is Vanguard's index fund that tracks the S&P 500. And so what we're going to talk about today is how to make a trading plan. And this would be with any asset, whether you're talking about ETFs or stocks. What do you do? How do you get started? And when do you know it's a good time to buy? So when you're looking at this chart, you'll see that I have my favorite indicator down at the bottom here. This is the relative strength indicator. And you can see on the monthly, we're skirting with being overbought in the S&P 500. There are times in the past where the S&P 500 will actually get overbought, deep into overbought territory before pulling back. But you'll see that recently, starting with 2020 back in January, when we just barely touched basically where we are right now, the S&P 500 pulled back significantly. So what can we expect? I never try to predict when there's going to be a market crash or when there's going to be a pullback. What I do is to make a plan in advance. So there are several different ways of doing it. You don't have to use really complicated technical analysis. One of the easiest ways to give yourself some basic levels is to draw a Fibonacci retracement. If you hit Alt F, you can drag from the bottommost part of the move all the way up to the topmost part of the move, and this will give you your Fibonacci retracement lines. And as you go further away from the top, the likelihood that it will pull back that far is less and less. So basically what you're looking at is where there would likely be support in the event of a pullback. So we're going to switch to the weekly time frame, and now each candlestick that you see is a week worth of movement. So one of my favorite ways of determining where price levels might be is looking at the weekly chart. And what you'll see just looking at this chart, this is the week that we're in right now, and this is 2 weeks ago. You can see that where we opened on this upward moving candlestick provides support. As this week pulled back, it didn't get down to the point where it would hit where we opened 2 weeks ago. This is a strong point of support. The open 2 weeks ago was $353.63. The low that we got to this week was $354.14. So if you're trying to get into an asset and you want to be a little aggressive, a good starting point is to look at a previous week's opening price and set your price a little bit higher. So instead of having it be $353.63, if you had set it at $355, say, you would have gotten hit this week and you would have had that order filled. That gives you a starting place and a base price for your investment. Now you can just keep repeating this process by looking in past movements. So we'll go to the base of this candlestick, we'll go to the base of this candlestick. That's not the base, but if you click on the center of a line, you can actually draw it up to the base, and you can see that you're giving yourself really good places where you would place orders. It all comes down to personal preference as to exactly where you want to buy. The more hits that you have on your line, the more likely that you're going to get filled if you place an order. So in this case, if we're looking at this fourth line here, this fourth purchase place, you'll see that for at least 2 of the weeks, they got close, but they didn't hit it. So if you wanted to really ensure that this price, this point, was going to get filled, you could look at the base of this wick, which is 304.17, or you could look at the base of this wick, which is 304.21, and learn that buying at 304.50 would probably be a high likelihood of getting filled if we pulled back to that level. Although when you look at it now, you can see this one's at 305.07, so if you really wanted to ensure that you would get hit, you would put in 305.50 or even 306 to make sure that you would get your fill. Because the analysts, the chartists who are looking at these charts, they're using these exact same points of reference to determine when they're going to get in. So sometimes if people are really enthusiastic about getting into the market, you'll see that the market doesn't pull back far enough to hit that low point of a previous week. It's all a matter of how aggressive or conservative you want to be when you're building your position. Depending on how aggressive you want to be and how far into the market you're going to want to be, you can make it so that your plan accounts for the biggest possible pullback, or if you don't think that's likely, you can make sure that you are almost all the way in the market, even if it pulled back to 78.6%. It's up to your own personal risk level to determine how much money, how much cash you keep on the sidelines. Personally, I always keep dry powder. When we went into this sell-off last March, even at the bottom, I had 38% of my portfolio in cash, and at the end of the year, I still finished at about 28% up versus the S&P 500 16% up. Having cash on the sidelines enables you to be able to buy all the way down, even if you don't know how far down we're going to go. So let's say you've set up your levels that you want to buy at. Now what do? Well, you could just go straight to your broker and just enter in buy orders, but I like to plan more in advance, so I'm such a nerd that I've created a spreadsheet, and there will be a link in the description below where you can download it using Excel. Excel actually has the feature to be able to update prices in real time, and they're delayed prices, so you have to keep that in mind, and they shouldn't be used for trading purposes, but it gives you a good overall view of where things are going. So this is the spreadsheet that I've created. We've got a starting balance place where you can put in whatever your starting balance is. For a holding pattern, I put in $20,000, and then you can enter your tickers over here. When you first open up the spreadsheet, there might be a indicator that says enable content, and what it means is it's wanting to be able to connect this spreadsheet with the system that's providing stock prices to Excel. When you put in a ticker symbol, you can just enter it into the tickers here and hit like VOO for the Vanguard S&P 500. Put your cursor on it so that you're over the cell that your ticker is in. Hit stocks, and it will convert your ticker into the stock pulling data. So you can see the first column, it's going to pull the ticker symbol. The second column, it'll pull the current price. In your trades panel is where you would enter in what trades you've done, and I've created a buy order planner and a sell order planner. We're not going to talk about the sell order planner in this video. We'll talk about that in a different video, but we'll talk about the buy order planner. So you haven't made any purchases in VOO right now, so you're going to leave the date, quantity, and per share empty. This is where you enter in the purchases that you're making in that asset. But here's where you plan your purchases. So we're going to alt tab back over to the S&P 500. Here we go. And we see that our first purchase could be at 353.63. But since we really want to make sure we get hit, why don't we just say 354 to get started? So you'd put here the quantity and here the price. So we know our price is 354, and let's say you've got, if you go back to the dashboard, you can see you can enter in the number of positions that you have. It will automatically calculate the position size as $2,000. You have 10 positions, $20,000. 20,000 divided by 10 gives you $2,000. So when you come to the trade panel, you can see that you have $2,000 remaining for this asset that you want to invest in. So if you put your first order as one share at $354, you can see that your position size is $354 because you own one share at that price. You have $1,646 remaining, and now you can put in your second order. So we'll tab back to our trading view, and we see that our second order would be at about $340.18 if we were at this base. But if you wanted to go off this wick, which is $341.92, and you can see that by looking up at the lows up here in the little indicator, $341.92, we could say that our next buying price would be $342. Just so that we remember, we'll just enter it in here. And now we go over here and we put in $342. If you wanted to buy one share again, you can see that your average per share cost after the second buy would be $348. You now own 2 shares, a total of $696, and you have $1,304 remaining. So we'll just keep going on this pattern. Our next buy could be at $326 or just $327. So we'll just make it $327 for ease of remembering. And now our per share cost is $341. Over here in this column, you'll see it shows you at that price how much is your overall position down. So at $327, your per share cost is $341, which means your entire position is down 4.106%. The thing to remember here is that when you're buying in stages, your asset will likely be down in value. We're not trying to pick when the stock is going to bounce and go up. We're trying to add to a position that we want to have, and as it gets cheaper and cheaper, we want more and more. So we'll go back to our trading view to find the next buying opportunity. You can see here we've got 1 and 2 and 3 weeks where it found support above our buy order line. And the highest week is $308.02. And then we've got $306.90 and $307.18. A fair bet is that we could probably see it pull back to $307.25. So now we've got another buy order at $307.25. We come back to Excel, we put in $307.25. If you see these number signs, a quick way of fixing this just means that the number that's in there is wider than this column. If you go up to your K box and double click when you see this icon, and it will automatically make the width of the column the widest it needs to be to accommodate all the numbers that are in that column. So after 4 orders, you can see we have $1,330.25 invested in VOO. You can see that you've got a remainder of $669 to invest, and you can see that at the price of $307.25, you would be down 7.611%. Let's say those orders actually go through as we plan. So we've got 354, we've got 342, 327, and $307.25. So now you can see over here, we've got the total amount that we had in. We have the per share cost of $332.56, but you can see now that our buy order planner has been affected by the orders we're putting in. This allows you to continually use the buy order planner even after you've been putting in orders in your assets. So as you go, you would delete the orders that you have in. This shows you that you've got $1,330.25, which comes from here, and now we can put in additional orders. So if we go over to Trading View and we suggest that, let's see, it pulls back to 295.04 or 296.37. Let's put in another order at 296.50. And you can see that it will tell you what your position size would be, what your per share cost would be if you made that order, in addition to all of the different orders that you already have that have gone through. And it updates how much money you have remaining. It shows you what the total amount of the different orders that you've put in your buy order planner will cost, so you can plan in advance what you want to do with each asset. And you can go back to the dashboard and do this with each of the positions that you have in your portfolio. Now, this portfolio is built for 10 different stocks. I would recommend that you at least have 5 to have a diversified portfolio. And when you change that, you can see that now each position size would be $4,000, 20,000 divided by 5. And when you go to your trades, you can now see that you'd have more money remaining in your VOO. So this planner is available free of charge on my website, and like I said, I'll put links in the description below, and it's a good way for you to be able to get started using TradingView to come up with your levels and using an Excel spreadsheet to be able to plan in advance.